All right. Hey, everyone. Mark here. Let me get this thing going. All right. Mark P. Markets. Hey, thanks for joining me for another Bitcoin day trade analysis session where we're going to be using the price action to see if there are any day trade setups. But also in this session, I want to focus on the intermarket correlation. I've talked about that here before, but I want to spend a little more time with that because for day trades, it can be very helpful at times because the other market, the market that leads, can give us an important hint or a helpful hint as to where Bitcoin is going over the next few minutes. Okay. And the idea behind this is not to take trades because that's what everyone wants. It's to help you confirm or not confirm, basically avoid a trade. That's the best way to use it. Okay. So with that, let's get started. Let me pull this thing up over here. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, I see I have like barely anyone following me here today. Probably the title is not very attractive. Anyway, here let's change the chart here and let's go to, hold on. I want to go to this one. Okay, cool. So also, by the way, real quick, I got a message from a guy saying that he received a message from my fake Twitter account, and the fake Twitter account was asking him if he had if he was on Telegram. Everyone, quick message: I'm not on. I have a Twitter account, but I don't contact people through it, and I don't have a Telegram. So if something seems strange like that, you get a message from me reaching out to you specifically, it's a fake because I don't reach out to people. If people are interested in like the things that I have to offer, I ask them to reach out to me either by email or on the Discord channel. You send me a message and then I respond to that. I don't send you a message. Okay. I don't have time for that. So please understand it's a fake. I have to put that out there because I keep getting these messages and I don't want you to get robbed because, as a result of your own ignorance. Please don't let them take advantage of you. Okay. Anyway. So also, if you're not in my Discord channel, please, there's a link in the description. Go there. There's a free area. There's a lot of valuable information in that area. Thanks to Bill and the details that he put in there. It's a great place to start if you're new. Now, it's not glamorous, and you're going to have to read some stuff, but this is not a glamorous game. You want reality? It's in that channel. Also, I have a learning area, right? Stian has been putting some excellent videos in there, but that's for students. That area is not for free. All right. So I've asked him to put some important videos that can really give you some extra foundation on top of the training that is in my program. So anyway, there's some good stuff in there. If you're interested in becoming a member, let me know. All right. There's this link in the description, and I appreciate everyone that joins. All right. Now, let's now get into these charts, shall we? I'm going to mention real quick, because in this session, I'm going to really focus more on the day trades. And I see your question, Steen. That's a good question. I'm going to answer that question here in a moment. But what I want to mention on this, just on the swing trade side of things, I called this trade the other day in the Signal channel. Okay, so only members got to see this, the specifics behind this entry, and it's doing well. All right, so here's what I have to say about that. It's not at its target yet, but it's getting there. I mean, this is definitely a good sign when you see this kind of bearish follow through after you're short. So you can't take this now. If you missed it, like I said yesterday, if you missed it, this is not the time to be getting short. This is much higher risk. Okay, this trade actually presented a relatively low amount of risk compared to recent amounts that I'm used to using for Bitcoin. Again, I'm not short, but there's a typical amount that's usually reasonable for risk. Okay, and this one would happen to be lower. Anyway, everything aligned, as you guys know, and this thing is working, right? Now, here's what I have to say about this. Depends on what price you got. Okay, if you got my price, which was 17.6 even, or not 5.95, basically, we can just say 6 even just for simplicity purposes. If you're short from 6 even, this thing at one point was at, it's about what, 600 points in your favor now, roughly, something like that. This thing was a little bit more than that, right, at its low. in a situation like this would probably be a good time to move the stop. Now, for something like Bitcoin, because of the way it moves, it's typically I would wait for like 1,000 points before moving the stop. Just like with the euro, moves 100 points, you move the stop. But this market, this environment lacks follow through typically. All right, so you're better off breaking even on this thing than having this thing turn into a loss. So I would suggest, if you're short from my price or a better price, okay, we had a guy in here, he's short from 18K. He was a little more aggressive with that entry. Great entry, but there was no confirmation. So he took a lot more risk. Well, it's paying off. I mean, he's got 1,000 points now in his favor. The point is, this would be a good time to move the stop to break even. Now, there's a good chance when you do that. I mean, 600 points for Bitcoin, a 600 point bounce is pretty reasonable. There's a good chance you will get stopped out for break even. But the point is, you're better off taking that break even than a loss. Because if this thing reverses, okay, and this thing starts getting all happy again, you will be happy you broke even. Remember the euro as an example for that. Okay, my 3 euro trades, 2 of them offered an opportunity like this, an opportunity to break even. If I had taken those opportunities, and keep in mind, that opportunity meant I was giving back 100 pips on each trade. Now, people are uncomfortable with that idea. Oh, I don't want to give back any money. Well, that's not your money. That's the way you have to look at this. Okay. When you have a profit like this, right? This thing is in the profit. This is not your money. This is the market's money. And you have to decide how you want to manage that risk. If you don't move the stop and you want to give this thing a chance to breathe, which is very possible, that's going to be greater risk, and there's a greater probability you will be facing a loss. I took that chance twice on the euro, and that cost me 300 pips or whatever, something like that, 210 pips. I forget the exact number, but that's what that cost me. So that could have been completely, that could have been just not even an issue, right? I could have just put the stop to break even. Yeah, and I would have broke even 2 times. And the third trade would have been minus 90. So now if I had done that, I would be only minus 90, not minus 310 or 350 or whatever the number is. Okay, so keep that in mind. I'm giving you the suggestion now. I'm going to put this information that I just explained, I'm going to put it in the channel probably in the afternoon sometime. I want to see how this thing plays out, but I'm still going to put the break even, okay? Because in this environment, it's about mitigating the risk, not being you're not going to hit home runs in this environment. You're better off mitigating the risk. Are we clear on that? I want to make sure you guys understand. All right. So this thing, if it goes to break even, do not think of this as a loss. It's break even. You just gave the market's money back. You have not given any of your money to the market. Okay. That's a very important point. New traders get this wrong all the time. Stop acting that way. Okay, if you find yourself in that situation, that's a behavioral thing, and that's a greed thing. All right, that's a desperation thing. If you're in that kind of situation, and you need the money, then you should take the money now, even though it doesn't justify the risk. Take something off the table. All right, even though this thing is about 1,000 points off of the target, take something off the table, and that's another way to reduce risk. Okay, so that's what I have to say about the swing trade part of this, the swing trade update. Again, if you missed that whole thing, you should be in the Signal channel. You should have access to that. You need to be an active investor. Go to my Discord, and there's information about that there. There's also a link in the description about that. Okay, you can go to the bit.ly link with buy signals, and there's information there on the packages. All right, now let's talk about Bitcoin on the day trade time frame. Okay, because that's really the point of this here. And like I've been talking about, what goes on the day trade time frame, you have to forget the bigger picture when it comes to the day trade mentality, because we're only interested in momentum, temporary momentum. So as a day trader, I'm only looking for 100 pip profit, 150 point profit, I meant to say, something like that, for a risk of about maybe 50 to 80 points, something like that. That's my criteria going into this as far as my reward risk and expectations. You have to make sure you have a solid set of expectations. If you think, well, I'm going to short this or I'm going to buy this and it's going to go up 1,000 points because I want it to. Well, you're definitely a novice if you're thinking that. Okay, so you have to respect the market and you have to respect what is reasonable. So that's going right into it. Now let's talk about the plan and the 3 steps that I talk about all the time when it comes to day trades. Now you'll say, what 3 steps? My students are familiar with the 6-step process that they learn in my training program. All right, all of you here are students, so I think most of you. So you guys know all that stuff. Well, to you guys realize what I'm doing here is I'm cutting that process to 3 steps for day trades, right? Steps 1, 2, and 6. That is what I'm doing. Now, again, if you're new, what's that? Well, you're gonna have to take my program to know what that means. But anyway, so step 1, as we know, is trend. Step 2 is levels, and step 6 is confirmation. Now, on that note, let me answer Stian's question here. He wants to know, do you also need to take a look at lower time frame support and resistance lines? No. We're starting with the 30-minute, right? And then we go to the 5-minute. There's no reason to go any lower than that. The 30-minute gives us our general levels. The 5-minute will give us minor levels. But the problem is this: the smaller the time frame, the more random the levels. So they're really not a good idea to get mixed up with. All right, that's why I work with the 30-minute levels and make your determinations based on the broader time frame. These levels carry more weight. All right, the 5-minute can get you into a lot of trouble if it lines up. If you have a minor 5-minute support and it's lining up with the 30-minute, okay, fine. But be careful with those smaller time frames. And there's no reason to go even smaller than 5-minute. Like, don't even waste your time with like a 1-minute chart. That's a complete waste of time. Trust me, I've spent a lot of time on smaller time frames. Okay, like 1 minute and less and that kind of stuff. All right, so let's expand this chart here, right? This is the 30-minute chart. As you can see, I have all these lines and things on the chart. Those are levels. But the first thing I'm interested in, though, is the general structure. Look at these. Look at what do we have here? We have a high over here, right? We have a lower high section over here. We have another lower high section over here. Now, what you can't get fooled by is when it starts to produce these bullish structures, right? Oh, the trend has changed. Not really. That's temporary. So this can be important for day trades right here. But that do not be fooled. The structure is bearish, and it proved itself again. Now, yesterday, when we had this session, I drew this rectangle, and I said inside of that zone would be a place to be looking for longs, right? Look at the price action we got. These are 30-minute candles. You had to wait a few hours, but eventually you got the long off that area. You see what I mean? That was the area to be looking for longs. But then overnight or whatever, some sort of catalyst came into the market and it blew through that area like it wasn't even there. That's the random nature. So that's why we wait for confirmation. If you were foolish and you stepped in front of this thing because, oh, it's the level, and I'm going to put a limit order there, you get caught in this. The chances of you getting caught in something like this is basically 50%. Okay, it's random. So you don't want to get caught in that. That's why you wait for confirmation. So now with that being said, our step 1 trend is identified. It's bearish, right? The intraday trend right now is generally bearish. That's what that structure tells us. So that means that resistance levels are likely to hold and support levels are likely to break. If we get short, we should be giving the short side more of a chance. We can justify being a little more aggressive on the short side. Again, intraday. The long side, because again, we have to think on both sides, the long side is going to be aggressive. The long side, we should expect less. The long side, we should expect fake outs and trades not to follow through. You can take a long, but you have to be very on top of it, because if it turns the wrong way, you can't fool around, because we're going against that bigger picture momentum. Okay, I mean, look at this candle right here. I mean, the set of candles, that's some significant momentum. So with that, now I want to get a sense of my levels. Okay, so we have an area right here. See that? This was an old support, and now it's going to act as a resistance. So this zone that I had drawn yesterday, right, as a support zone, is now going to be a resistance zone. So that's an area where I should be considering short setups for day trades. You may have to wait a little while to get up into there, okay? Now, don't make the mistake of thinking if this thing spikes for whatever reason and you see something like that, don't make the mistake of thinking, oh, it's a long now. People that follow their oscillators mindlessly and all that other garbage, all that retail stuff, they're the ones that get long in there. Understand, as a day trader, as a retail day trader, we are capitalizing on the mistakes of others, the ignorance of others. That is the only way we can really make money. And that's what I like to think of as a temporary inefficiency or a temporary advantage, because it's not consistent. Meaning, when you have a real inefficiency that you're exploiting, it's usually some kind of structural or some kind of permanent thing, or something that goes on for a much longer period of time. Like, for example, back when I started out in this game, markets were fractional, right? Stocks were priced in fractions. That was actually an inefficiency. And when you combine that with an advantage of speed, which is what we had, that is how we were able to make money, a lot of money, in more of a skill-based way. We're talking 20 years ago, when most of these clowns were still babies, okay? They weren't even in the markets. I was active in the Nasdaq back in those days, and those were the advantages I had. I wasn't able to appreciate them at the time. It took me a long time to realize how I was able to make money, okay? And that was years and years after that game stopped. All right, and there's some political and there's some reasons that they're political why that game no longer exists. So don't even dream about those days or those numbers. All these numbers that these fake gurus yell about today. Oh, I made $10,000. I saw those numbers for real. Okay, they were real, and there was a reason why that was possible and why it's not possible today, or it's possible but 1,000 times harder. Okay, I'm not going to get into that now, but the point is this: we have to capitalize on these inefficiencies, these temporary inefficiencies, or basically the mistakes of others. So this is an area where people are likely to make a lot of mistakes. You're going to get longs, okay? Just like this area up here, right? All these morons buying into this area and then not adjusting when the sell signal shows up, and then they get caught, okay? And that's them banging out. Who's banging out? All the clowns that got long in this area here and thought the market was turning. That's who gets banged out, okay? They get caught, they get margined out, they get stopped out, all that stuff. Anyway, so now, will we get another leg like this? I don't know. We need a catalyst. We need something behind that. So right now, again, I'm still forming the plan here, right? So the plan is we're looking for shorts in this zone up in here. It's possible to get a short earlier. It's going to be a little more aggressive. We're going to check the 5-minute chart for that. But anything up in this area. Now, what about longs? Where should I be looking for longs? Now, this is a tricky question, because the first thing people, right here, this is where you should look for longs. Well, that's where everyone is going to be getting long too early, stepping in front. So when you have the market against you, because again, this structure is bearish, you want to wait for extreme prices for longs. That's extreme. That's when it goes a little further, and then you get all the breakout traders coming into the market because they're Captain Obvious and they're chasing everything with their RSI. Okay, and that's where you look for the fake out, and that's where you catch them. So that's why if I'm going to go long, I want to see an extreme price, right? And there's a better chance that it squeezes, kind of like the situation we had here. Look at this situation right here, right? This just occurred over the previous 30 minutes. Look at this. So what actually took place here, right? When we evaluate this price action, we went slightly lower than that low. Okay, see that? And all these morons right here got caught. They got caught and they got squeezed, right? All those people that shorted into the breakout because their moving averages told them to do so. There was a crossover on the 1-minute chart, okay? And they got caught in this. Yeah, I make fun of them a lot because they're morons. I'm sorry. It's a hard word to use, but if you believe in that dream that you can make money in the markets using some kind of oscillator or some kind of gimmick that was basically presented to you, and you think that, you have a long way to go, because markets are not a place to make money. There's nothing favorable for us in this environment. We have no advantages. We can't beat an efficient market. So That's why, fake gurus and all them, they avoid that efficient markets hypothesis thing. It actually refutes all the stuff all the gimmicks that they pour in front of you. That if you're familiar with that academic side of things, then you will be in a better position to judge and be like, oh, you know what? Right. If everything is basically against us and we only have like a 50% chance of winning because we can't beat the market, then we need to look at something else in order to have some sort of temporary advantage. And that something else is behavioral. That's what it is. That's what it really comes to. All right. So now the point of my stream here, right, which was the title, is we have our game plan basically, right? Looking for shorts up in here, looking for longs, in this area here. Okay. That's it. Anything in between, not, especially on the long side, I'm not interested. Now let's go to our 5-minute chart because we have some price action taking place over here. And let's see what this looks like on the 5-minute chart. Okay, for setups. There's an inside bar right there, but that's in play. I'm not going to chase that now. And anyway, this is not the ideal location I just finished talking about for 15 minutes or 20 minutes. Okay, so the ideal location is up here. Now let's switch this over to the perp chart. Okay, so we're going to go to BTC perp. Okay, and we're going to go over to our Binance chart. And we're going to now look at the price action on there. And basically, it's the same thing, right? And these lines are from previous analyses. I don't need all these lines here. We know where our levels are now, okay? We know where our intraday levels are for today. So I'm going to erase some of these, right? And I'm just going to redraw them so that they make sense with the analysis that I just conducted. So here, we have this area here, right? That's where we're interested in longs. And basically, we have this area. It's like all the way up here. Right? That's basically where we're interested in shorts. Okay, something like that. Anywhere in between, this is going to be extremely random. Now, the bigger picture and the smaller picture basically favor the short side. So, I mean, this signal right here, you can be like, oh, how far is this away from the signal? 17,034 is the low. All right, we're currently at, so it's only 10 points off. That's not horrible, but the point is this location is really far from ideal. If anything, let's see if we can get one more fake out or something. I mean, this right here will be an aggressive area if the market can even deliver that. We'll see. Now, here's the point that I want to make, okay? And I know everyone, I'm sure if you look at, the fake Guruville, they're all, oh, I call the short. Everyone's probably bearish now. Meanwhile, a few days ago, they were all bullish, right? Yeah, please do me a favor. Do yourself a favor. Stop listening to people. All right, so let's now switch this over here to the Nasdaq, okay? NSX USD. And again, not too many people talk about this because they don't understand it or they just don't have the experience. This is one of the very first lessons I learned, and it had nothing to do with Bitcoin. Back then, it was stocks. Back then, when I learned this, it was stocks against the S&P. But this relationship, this intermarket relationship, applies to other markets, right? All markets have some sort of relationship. And there are markets that lead. And it's really the S&P that leads, right? And the Nasdaq is a pretty close follower. I mean, the S&P and Nasdaq are pretty much like locked together. But the Nasdaq gives us a nice heads up. This is the Nasdaq on the 5-minute. I mean, look at the charts. They're not exact, okay? But look, it gives us a heads up. Nasdaq is selling right now. Look at Bitcoin. So how is that helpful? Well, for one, if I see this right now, okay, and there's no buying going on, I should definitely not even be thinking about buying Bitcoin, okay? Shouldn't even be a thought. Now, as far as selling, well, what about a short? This thing is selling off. Shouldn't you be short? I missed the short, okay? Because you don't want to chase it. Where is this thing now? This thing is basically now off from that potential entry. The low was 34. This thing's like what, 30 points off that signal now. You don't want to chase it. So, okay, no problem. You have the levels, you wait, okay? In this entire zone right here, you don't want to do anything. If you're short, you hold on, if you happen to be short. If you're not short, you do nothing, okay? We're not going to be looking for longs here. And Steen, to answer your question from earlier, you say, well, what about the support and resistance levels on smaller time frames? This right here would be a support level now, but based on the 5-minute chart. it's not going to be very reliable. I mean, obviously there's something going on there because look, right, it's spent some time fooling around in that area right there around that price, but you can't sit there and really put any weight on those. So you have to treat them with a lot less importance. Okay, if you get a clear signal there and you want to give it a try, okay, just understand what you're dealing with as far as the random nature. Okay, so back to the Nasdaq here. So the Nasdaq gives us our lead, but we're not going to use this to take the trade. So what we want to see is where does the Nasdaq find support? Okay, is the Nasdaq going to find support over here somewhere? Again, that's a 5-minute chart. But when we can take a look at the 30-minute, right, on the Nasdaq, and we can get ourselves a point of reference. I mean, look at this. Look at this rejection off of this area, right? Look at this candle developing now. It's a bearish inside bar. This candle just opened, right? So we have 30 minutes for this candle to close. You know, how does it close? The support on this thing is probably going to be around here somewhere, okay, which is sort of getting close to that area right now. That's a potential support, all right, based on the 30-minute. Okay, we're fooling around in the area now, but you want to give it some more room, right? Like something like that. So there's a possible support area developing, or it's probing a support area on the Nasdaq, and that can translate into buying activity. All right, that can translate into buying activity around here somewhere. So even though you say, well, you just said the 5-minute is unreliable. Well, I'm not using this information, right? I'm using the 30-minute information, not this information. So it's just a coincidence that it's there. Okay, it's the 30-minute that carries the weight. So this area may pose to be a buying area for the Nasdaq. And if that's the case, that could turn into a long for Bitcoin. All right, it can give us a bullish signal. So that can give us a heads up for a number of reasons, right? You may want to, if you're short and you see a buy signal develop there, maybe a heads up to cover if this thing gives you a green candle coming right out of there. Okay, because as you can see, the Nasdaq is more exaggerated. It's more dramatic than Bitcoin is, right? So it's basically giving us that heads up. So we'll see how that plays out. But I think this can be a very helpful tool. You know, people are always like, well, how can you see what's coming next? Well, this can help you. This is forward looking, what I'm showing you here, not the garbage from the RSI and the moving averages and all that other stuff. And I call it garbage because it's backward looking. Okay, it's based on, you know, it's basically taking the current price and it's averaging it over recent prices, and it's just drawing a line. You're looking in the rear view mirror. The Nasdaq is not looking in the rear view mirror, it's going forward. You want forward looking information. That same argument is basically how I justify using trend lines, horizontal ones in particular. You can use your regular trend lines, but I prefer the horizontal ones. And there's a few reasons for that. I go over that in my training as well. But the point is this: whether you use a regular trend line or a horizontal trend line, they still focus your attention into the future. All right, so there's a potential future price action situation around that area. That is all that matters. An oscillator will not help you with that. And I always get the question, how come you don't use oscillators? All right, that's why I spent a lot of time with oscillators, especially momentum oscillators. And I spent years wasting my time. I'm trying to help you avoid that situation if you listen. But people I know all of you, but I'm talking to new people that come across this and they're like, oh, I don't know, this guy doesn't use any oscillators. I don't know. He must not know what he's doing. I'm going to go watch this other fake guru who uses like 10 of them. All right, please, I'm trying to help you. All right, hey, okay, no problem. Constantino, it's good to see you. So anyway, so I have a few more minutes. Let's see now how this thing plays out. What's going on here, right, with this Nasdaq? We're getting a little hesitation. Now, an open candle, you can't make judgments on an open candle. This candle can close dramatically red very easily, right? It goes from green to red very quickly. So as you can see, Bitcoin here getting that little bid going, but the Nasdaq is telling us don't go for it, right? Nasdaq is saying it's nonsense because I'm red, okay? But I can't make any judgments on any of this because it's an open candle. See, look how Bitcoin's like, oh yeah, you're right. Oh yeah, it's red. Oh, Oh yeah, all those people going long. Oh, sorry, Nasdaq's going lower. Okay, so we'll see. Now, again, you'll say, well, okay, so looking for longs over here, right? You're thinking, well, maybe, but that's not the most opportune level, right? Like I said before, we got the most opportune level from our 30-minute, and that's going to be the extreme low. And I explained why. So that's the game plan. All right. And now the NASDAQ gives us hints. Now watch a bunch of fake gurus start copying me. Just watch, because I know they watch these videos. No one else watches them. So I'm a good source to copy from, right? Because no one knows about me. Anyway, so this says forget about longs right now. We wait for this extreme area, right? So you have to be able to put these two things together and see them in light. It's not a one-to-one thing. I need to emphasize that. It's not a one-to-one relationship. Don't make the mistake of chasing this thing, saying, okay, this is still short. I'm going to short Bitcoin and hope this continues. Don't make that mistake, because you're going to be subject to the random nature. And while this thing is nice and red right now, it can give us a bullish pin bar by the close. We have 3 minutes before this candle closes. All right, so does that make sense to you? So the purpose is, even though I'm not going to be able to take a trade here because I'm not going to have the time, right? The market's not going to give me an opportunity to show you a trade idea, obviously, because we're nowhere near any opportune prices. I missed this one because I was talking too much. But hey, I don't know if I would have taken that anyway, right? Because again, this is not the ideal location. And in this environment, you are better off being selective. Don't force trades, especially as we get closer and closer to the holidays. Markets are likely to get less, they're likely to have less of a catalyst. And why is that? Because everyone goes away. Everyone, especially if the market's not pushing highs and stuff like that, no one's going to touch this stuff. So the probability of getting follow through is going to be lower and lower. You really have to stick to the highest volume time periods. One of those periods is the US stock market open. And that goes for Bitcoin too, right? Because if the NASDAQ is active, then Bitcoin is active. So basically, you're just playing the stock market and you don't even realize it. All right. So that's that. All right. So you guys follow me. Any questions so far? You guys are quiet today. Any questions? I hope you find this useful. I see a couple more people joining. That's nice. So welcome if you're new. Any questions about this? So the point of this stream, again, is observing the NASDAQ relationship and the Bitcoin relationship to get a sense of what's coming, a hint. Okay, it's just a hint. We know our levels, we stick to our game plan for Bitcoin, and there's just nothing to do. Flat is a position. You're better off waiting outside of the market. You're better off waiting to, waiting, wanting to get in than being in and wanting to get out. Okay, so that's an old piece of wisdom. So please keep that in mind. All right. So that's that. We know, the levels. Now, one thing I'd like to do here, I can't do this now, but one thing I'd like to do is I'd like to keep track of these day trades. Now, I haven't had a day trade like in a few days on here. I think I had a short the other day, but since then I haven't, there hasn't been, I wasn't taking any trades into the FOMC meeting. And yesterday there was nothing. Today it looks like there's nothing right now. But if you're interested in the day trade aspect of this, a setup may develop at 1 o'clock in the afternoon, or 2 o'clock in the afternoon. All right. So you have to sit here and you have to watch and you have to wait, or you have to set like a notification or something and see what happens to see if you get your setup. Okay. But I mean, if you're short this thing, great, from the day trade. Otherwise, there's nothing to do. Okay. BTC follows tech stocks. Is Nasdaq and S&P, or it doesn't matter which one. It could be Nasdaq or S&P. I mean, the S&P is the leader. Okay, it's just the S&P is a slower. It's a bigger market, so it's slower. You can use either one. It follows both. They all follow each other. The S&P sets the tone, and everything follows the S&P. Okay, so just want to mention that. And one thing before I wrap this up, I want to show you something here, because we haven't had a chance to talk about this. And usually on this stream, I talk, like I go over major markets, but I've been focusing more on the day trades. Just take a look at the bond market. All right, now we have FOMC and CPI out of the way. I mean, look at this. All right, does that look like dramatically bullish to you. People get caught up in this nonsense, but I don't know. All I see is a resistance level that is still intact. Okay, it's flirting with it, but it's not breaking. Okay, so just something to keep in mind for those of you that know what I'm referring to there. Okay, always check that thing every day. All right, so back to the NSX, USD, and we're going back. And by the way, this is the bigger picture on the Nasdaq, right? And it broke that support. Okay. Anyway, so just wanted to mention that those are all bearish signs, and we are in a highly optimistic time. This is holiday time, right? Markets are supposed to be happy. Powell tried to get that started a few weeks ago. Guess no one's listening to him this time. All right. Anyway, okay. So everyone, hope you found that helpful. If you have any questions, you know where to find me. Check the links in the description. Also, watch out for the fake me, because I would not reach out to you and ask you for money. I always have to just make sure you guys are aware of that. Okay. So, hey, everyone, enjoy the rest of your day or the rest of your evening. And thank you very much for watching.